This is the Net Group Investments Insights Podcast, where one or more of our experts explore a variety of views and insights that investors care about.
Hello, I'm Trevor Garvin from Net Group Investments Multi-Manager. Welcome to this week's installment of your market and economic wrap titled Trump and His Tariffs Push Global Economies to the Brink. Geopolitics is certainly taking central stage at this point. Political and economic commentators agree that not since the end of World War II has there been so much global uncertainty and volatility. Political leaders are dealing with the ongoing Ukraine and Russian conflict, with both Russian President Putin and Ukrainian President Zelensky positioning themselves for a Trump administration brokered peace settlement. An imminent peace treaty a few weeks ago seems now more distant, and we watch as the frustration of Trump grows and how he and the US administration may react. The Middle East conflict has also intensified, with the ceasefire now at an end and clashes resumed. NATO and its European members are also taking strain as they feel the pressure coming from the US to increase their spending on defense or face the risk of the US pulling out of NATO. The US is forcing them to spend at least 2 to 2.5% of their GDP on defense, with many countries announcing material increases in spending over the course of the last month. Much of this also on the back of fears of further Russian aggression across Europe. Canada and Greenland have also been feeling the pressure from the Trump administration in terms of noises that it has made to take over these territories for security and economic reasons. Denmark, who govern Greenland and are firmly against this, and new Canadian Prime Minister Mark Carney has strongly spoken out for Canada's independence from the US. Indeed, we are in interesting times. Sadly, 4 days ago in both Bangkok, Thailand, and the capital of Myanmar, Mandalay, a large earthquake struck, 7.7 on the Richter scale. Much devastation was caused, with the death toll now well over 2,000 people, mainly in central Myanmar. This is the worst disaster to hit Myanmar in more than a century, a country currently under military rule and with minimal resources for a large-scale rescue effort. Domestically, the GNU and the ANC have also had a busy week. The ANC has come under fire for the way it has handled US relations, specifically with the South African ambassador being forced to leave the US for remarks that were made. President Ramaphosa will need to announce a new ambassador to the country's second largest trading partner, and we wait to see whom that may be. The second major issue, of course, is getting the national budget, as presented a few weeks ago by the finance minister, passed through Parliament. The rand is currently trading at 18 Rand 40 to the US dollar, weaker from the end of last week, where it was around the 18 Rand 15 level. This is largely being caused by the market uncertainty over the national budget. Parties are divided over whether to support the finance minister's 1% VAT increase over the next 2 years, which is required to fill the 58 billion rand budget shortfall. Rating agencies like S&P and Moody's have increased the pressure, saying if agreement is not reached, it may put the country's longer-term fiscal stability at risk. Political parties continue to be in heavy discussions prior to the 1st of April deadline of the new fiscal year and the vote in Parliament set for Wednesday, the 2nd of April. Globally, the uncertainty over the impact of the evolving trade war on US and world trade remains the dominant theme in foreign exchange markets. President Trump's decision to press ahead with 25% tariffs on all automobile imports to the US weighed on markets due to the prominence of the automotive industry across both Europe and Asia. The local market recovered marginally at the start of last week, but came under renewed pressures towards the end. US equities also started the week on a firm note, but fell heavily on Friday, with markets across the US and Europe down between 2 and 4%. South African industrials were the main losers, as investors worried about the implications of high US import tariffs on local manufactured exports to the US. In bond markets, the US 10-year yield is hovering at around 4.34%. Little changed from a week ago as markets continued to balance the prospects of higher US inflation and a trade war-induced recession. Gold has set a new historical high, trading at $3,081 an ounce last week, as the metal's attraction as a safe haven asset in a risk-off global environment strengthened. That brings us to the end of today's market report. We are in a fast-moving market environment with much uncertainty. Investors should sit tight and remember their long-term investment horizons. Till next time, with thanks, Trevor.
This podcast is for marketing purposes only. The information contained in the podcast or video was for information purposes and does not constitute advice, recommendation, or an offer or solicitation to purchase or sell any funds or strategies to any person in any jurisdiction in which the offer, recommendation, or solicitation to purchase would be unlawful.